One of the products that's gotten a ton of attention from Robinhood recently is their NCAA event futures. Now, technically, this is a futures contract, but it's based on an event that's going to happen. In this case, a sporting event. A lot of people are saying this is gambling, and it looks a lot like gambling because it's similar to the kind of bets that you can make in Las Vegas. But if you think about it, isn't a lot of the things that we're investing in actually kind of like gambling? Let's just look at some information from Bloomberg. Here you have commodity futures, energy futures. You can bet on the price of oil tomorrow, next month, next year, gasoline, industrial metals, agriculture, corn, wheat, cocoa. These are not long-term investments. These are not funding businesses. These are futures contracts. If the futures contract closes at a higher price, someone is going to make money and somebody is going to lose money. If it closes at a lower price, the same thing is true. It's just the opposite side of the trade. So in any one of these cases, there is someone taking a position for one reason or another to bet for something and to bet against something. That's what the futures market is about. We could extend this to currencies. Again, this is from Bloomberg. You have markets made in all kinds of currencies around the world. Again, those currencies are not funding businesses. Those are not long-term investments. These are short-term positions, and those positions are put on for a reason. Maybe you're hedging something. Maybe you're going on a trip. Maybe you're making an investment in another company. There's reasons that these contracts exist. So is this gambling, or is what Robinhood is doing is gambling? I want to go through exactly what these contracts are and where they could actually provide some value to those of us who are using them as an investment feature. Now, I'm not particularly a fan of Robinhood getting into things like NCAA futures. To me, that belongs with a company like DraftKings or BetMGM. But the futures contract and some of the things that Calci is making a market in are really interesting and could be really valuable. So let's dig into some of those things today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the announcement from Robinhood because this is really where it all started, introducing the men's and women's college basketball tournaments, trade contracts for every matchup plus the championship. You can actually go in today into your Robinhood account and look at the price for each one of these games. There's a few that aren't actually available, like the 1 and 16 seeds, I think are not available at this point. But you can bet on any of these games and who's going to win, and the price is going to be made by the market. This is what this looks like if you're in the Robinhood app. Like I said, some of these are locked, but some of them, there's going to be different odds. Obviously, higher ranked teams at this point in the tournament are going to be much more highly ranked, not very good odds, but it kind of runs the gamut and it looks a lot like a sports book. So how exactly does this work? Robinhood is not actually making this market. I'll get to what Calci is in just a second, but these are contracts and they're traded during normal trading hours. And the contract resolves on April 7th, 2025. So that's determined by the outcome of the event, but there has to be a date with a futures contract where there's actually settlement of the contract itself. This happened with the election. When the election happened in November, there was a market prior to that. Trading on that market closed prior to the election actually being called, but then the contract didn't actually settle until I think it was in January at some point, probably after President Trump in this case was sworn in. So after that contract resolves, then you'll actually see payouts from any of these contracts that you may have a position in. So again, this looks like gambling, and in a lot of ways it is. That's one of the things I'm not particularly happy with Robinhood leading with this product in particular. But one of the things I do appreciate about Robinhood is them pushing the envelope. We want a company that is growing quickly, that's young, that's more mobile and digital first, to be pushing the envelope. How far is too far? You're not going to know, and you're not going to differentiate yourself if you're not going to take chances like this. And I think there are areas where this could be really valuable. So let's get to a few of those. This is the Calci site. And this is the company that's actually making the market. They're actually the ones taking the risk on all of these games. You can see right here, men's college basketball championship game. These are the odds that Duke and Florida are going to win. You get 24% chance that Duke is going to win it all and 20% chance that Florida is going to win it all. So that is what this particular market looks like, depending on what sort of thing you want to take a position in. But there's also economics. What is the Fed funds rate going to be in May? What are the number of rate cuts in 2025? What's going to happen with egg prices this month? These are all things that could be really pertinent to your investing situation. You may want to take a position in what's going to happen with inflation in March or GDP growth. Is there going to be a recession this year? If you're long high growth stocks, maybe this is the kind of thing that you would use to hedge against some of that position. Hedging is something that all kinds of investors do. Hedge funds do it. Pension funds do it. Companies do their own form of hedging depending on what their risks are. But these are not things that are out of the ordinary in finance. And that's where I think we really need to start looking at what these prediction markets are and how could they potentially be more useful, more valuable than what we have currently available, especially to those of us who are retail investors.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
Let's go back to Bloomberg here. You and I are not going to go in and trade gold in the futures market or corn contracts in the futures market. There's maybe ETFs, so you could get exposure to some of these things, but you probably don't have the right type of account to make those kinds of trades. And those are typically left to institutions. One of the things Robinhood has always talked about doing is democratizing some other things in the financial industry that is typically left to those who are wealthier individuals. So if you are a billionaire and you're worried about what's going to happen with interest rates, you can just call up your broker and say, hey, I want to hedge against interest rates. That may be something that could be valuable to you. Now we can do those kinds of things. This looks a little bit different than what is traditionally traded, but technically the contract is very similar, and Calci is actually regulated by the CFTC. This is another thing that doesn't get a lot of exposure out there. This, again, looks like gambling because they're making markets in things like sporting events, but these are futures contracts that are very similar to the contracts that we see every day and quoted by the mainstream media. So these are the kinds of things that you can see just on a macro level. But one of the things I think is really valuable is as data points. One of the things that I think the election really showed with Calci was that the prediction market, this futures market, was actually much more accurate than a lot of the experts who were trying to predict what was going on. So today in the stock market, what you have is the experts are the analysts. When somebody reports earnings, or Tesla in this case, reports their deliveries for the quarter, they're going to say, you know what, they beat or missed estimates. Those estimates are coming from analysts on Wall Street. That's their best guess for what's going to happen. And a lot of times stocks are priced based on those best guess, because those analysts are building models, they're future cash flow models, and a lot of institutional investors are going to take that and say, okay, this investor, and they'll say, okay, I think this analyst is correct or incorrect, and there's upside or downside in a certain stock. But that's really just one person or a couple of people's opinion about what's going on. It's not really a full market. With something like Tesla's deliveries for the quarter, I would be willing to bet that this market, at the end of the day, is going to be more accurate than analyst estimates. At this point, analyst estimates are still over 400,000 units sold for Tesla for the current quarter. If you have read any of the news out there about Tesla, you know that they are really struggling in Europe and China. Don't have any official numbers out of the US yet, but seems like not going to be a great year here either. So 343,000 units sold, not out of the realm of possibility. And you can see that that's where the market is right now in Calci. So this is the kind of thing, if you're a Tesla investor, or you have any sort of position in Tesla, this could be instructive with how you're thinking about the stock and the reaction to the market. If analysts are expecting 400,000 units to be sold, and a prediction market is saying, you know what, there's only going to be 340,000 units sold, and the number comes in closer to this than you get from Wall Street analysts, that could tell you what's going to happen with the stock when those delivery numbers are released in early April. There's not a market for everything, and Tesla is going to be a unique example because there's one number that drives a lot of things for Tesla, but you can see here that there's a lot of really valuable futures contracts on this platform. And this is the kind of thing that could make its way to Robinhood and actually become more accessible to more and more investors. So I don't think this is something that we should overlook and just call gambling because we don't like necessarily that you can bet on the NCAA tournament on Robinhood. The underlying contracts and the underlying idea of these futures contracts could ultimately be really valuable to investors, whether you're looking at the deliveries from Tesla or what's going to happen with interest rates. And having that all on the Robinhood platform is probably good for business long term. But let me know what you think about these futures contracts making their way to Robinhood. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.